Guys, I know most of you are scared with the retracement we just had with Bitcoin and the rest of the crypto markets, with Bitcoin retracing single digits and the rest of the altcoins retracing double digits. I know most of you are scared, but this is a bull run. That's what a bull run is made of. And today, in this video, I am going to provide you some alternative narratives. Forget what the other lot are telling you, because I think most of these, they are just jumping from one position to another. But here, we step back, analyze from a distance, and actually try to understand what could be contributing to this retracements. It's a market, people take profits and so forth. So we want to go behind the scenes and actually give you some of the reasons that are causing this retracement or drawback for Bitcoin, and that also impacts the rest of the altcoins. So if you're interested in what we're going to share with you today, an alternative take on what could be causing this retracement, please keep watching. But before I jump into this video, guys, please know that what I'm going to share with you in this video is not financial advice. If you do require financial advice, please approach someone who's trying to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes, and this content is also not targeted at UK audiences for the sole reason that the UK authorities do deem anything crypto related to be extremely risky, and they're trying to protect you just in case you end up losing your investments, your funds, and so forth. That said, guys, if you are new and you have not subscribed, please consider subscribing to our channel. The objective remains to grow the channel, and we know with your help, guys, we are going to smash our targets for this bull run. We are going to go into the thousands of subscribers, and that can only happen with your help, and for that I appreciate you in advance. Now let's come back to what's causing the Bitcoin retracements, where Bitcoin achieved 108,000 or somewhere thereabouts, an all-time high, new all-time high, before retracing all the way down to close to 90,000. I think on some exchanges it went down to 90,800 or somewhere thereabouts. So what has caused this? Let's go behind the scenes there, give you some reasons, proper reasons why this is happening instead of guessing. But there are going to be three alternative takes. You are free to choose which one you think mostly applies. In the end, at the end of the video, we may try to pull everything together and maybe give you our own take on these three alternative takes on what might be causing this Bitcoin retracement, the crypto markets retracement that has been the first major retracement after we reached the 100k mark. And you can see there's panic everywhere. But guys, this is a bull market. This is what happens. It's too early to be calling off the bull market to say it's ended. That is at least my own opinion. So let's start with the psychological milestone of Bitcoin hitting the $100,000 mark. So the $100,000 level is a major psychological milestone representing a round number effect that often acts as a significant resistance point in financial markets or in the Bitcoin market, as we are talking about Bitcoin. Traders and investors are naturally drawn to such levels because they appear significant, even if fundamentally arbitrary. And I think the 100,000 mark is arbitrary in this case, because if you're expecting Bitcoin to reach 150k or 200,000, why are you panicking at 100k? Doesn't make sense, does it? So when Bitcoin approached or slightly exceeded the $100,000 mark, many participants within the space, they started selling. If you remember, we made something like 3 or 4 attempts before we actually smashed through the $100,000 mark. So some people started to lock in profits, expecting resistance at this level. Did it last? Not really, but now you see other people are taking advantage of this. I know people are coming up with various reasons why this is happening, but here we are trying to remove emotions and the opium, and we're trying to give you the real facts, the bare facts, so to speak. The next psychological impact could be what's known as behavioral bias, where cognitive biases such as anchoring, which lead people to focus on round numbers as targets or limits. So people have been targeting 100k and thinking, or some might be targeting 110, then thinking 110, let us pull back, because if you wait for an exact target, which is a round number, you may never sell because everyone is targeting for that. So if your target was 110, you may start taking some profits at slightly below that. This is how you take profits effectively. If you got a target, you may want to go in maybe 2-3% of that target, in some cases even 5%, because if you wait for that target and then that target turns out to be an anchoring target with a psychological bias, you may never be able to actually take profits from that target because everyone will be doing the same. We are humans, we are creatures of habit, right, after all. So for those who want to know more about what anchoring is, well, anchoring is a psychological bias in decision making where individuals rely too heavily on an initial piece of information, which is the anchor, or the 100k in this case, or 110 if you want to consider the collapse from 108,000 to the lower 90,000. So with anchoring, individuals rely too heavily on an initial piece of information when making subsequent judgments or decisions. This cognitive bias can influence how people perceive value, estimate outcomes, or make choices, often causing them to be overly influenced by the first number, idea, or reference point they encounter. And this is how anchoring works, if you want to know more. And as an example, when presented with an initial piece of information, an anchor is established. This is the first piece of information that serves as a reference point. You then adjust from that anchor. You are trying to make an adjustment. Do you go slightly over? Do you go just below it? So subsequent judgments or decisions are made relative to that anchor, but the adjustments are often insufficient, leaving the anchor with undue influence. So you might make some adjustments that it's 100K, I'm going to take some profits, and then the price keeps skyrocketing to 108,000, for example. So then you start panicking that I'm being left out, and you FOMO back in, and then bam, there are some people with a target at 110. They start taking profits as soon as they smash the 108,000 mark. So you get hit again. So in the example of Bitcoin, if Bitcoin's price is anchored at around, say, $100,000, traders may perceive this level as significant, influencing their decisions to buy, sell, or hold. Because some actually wait for it to go higher, establish support, and then start buying at a higher price because they always want that safety net of support. Whereas others are scared. If they see resistance, they will sell before that and wait for it to go above the resistance. Those are the intricacies of technical analysis, unfortunately. And market participants may also overreact to reaching or failing to reach the anchor, even if the number lacks intrinsic significance. Like I just said, if they were targeting 110,000 and then it stops at 108,000, people start panicking then and say, oh, we can never go above 110K. Maybe this was the top. Ignoring everything else like the fundamentals, the Bitcoin cycle theory, and so forth. They ignore that and just start panicking. This is the top of the market. Those are people who are as neurotic as that. Those are people you probably do not want to follow. But unfortunately, again, we are creatures of habit. We go for group mentality, and where some of these big accounts on YouTube and Twitter, you start following them and listening to them, and they are leading you down an alleyway, and they are subject to some of these things that are at best pretty much basic. Moving on, we got market dynamics as well. They do influence the collapse. They have the possibility of having influenced the collapse of the Bitcoin from 108K to where it is today, or at this moment in time. As the price rises towards a psychological milestone, leverage and euphoria increase. Profit taking by short-term traders and holders and institutional traders amplify the retracement when euphoria begins to wane. So if there was plenty of hype, or Michael Saylor, this US Bitcoin Reserve Fund and so forth, if that loses traction, there goes the price. The floor drops. And I think that is also contributing this factor. And historically, large psychological levels in Bitcoin, for example, 20K in 2017 and about 64K in early 2021, they've often marked temporary tops or at least strong resistance points. So 100K could be a strong resistance point that we need to smash and weaken over several attempts before we even start dreaming of that 110K target. Next, institutional influence. They want to control the market structure. That's something to pay attention to instead of hiding behind what Jerome Powell recently said, the chairman of the Fed. If you got institutional involvement from the likes of BlackRock, Fidelity, and MicroStrategy, they may likely have vested interest in managing the pace of Bitcoin's price appreciation. Don't ignore that. Extreme volatility and parabolic moves can destabilize markets and create inefficiencies that deter institutional adoption. So, for example, if Michael Saylor or BlackRock or Fidelity have seen that the current euphoria is deterring other institutions to join the party, they may try and cause havoc so that the small players like retail who are doing this get disorientated and maybe sell their positions or leave the market, and then the whole thing goes crazy again. That's something to pay attention to. Institutions may use larger sell-offs to accumulate at lower prices or create structured ranges where accumulation is more predictable, aligning with broader market strategies. They may use market makers, and market makers, that's their job, to create a market. Institutions are also responsible for structured volatility. Institutions benefit from controlling the narrative and market pace by injecting liquidity strategically during retracements or rallies. For example, a coordinated sell-off at near 100K might allow these entities like your BlackRock, Fidelity, and so forth to regain exposure at more favorable prices, because when they start selling at that, the mere mortals who joined recently, I'm talking of you retail, they'll start selling thinking, yeah, we'll catch the market at a lower price. And then before you know it, the market changes direction and you're left behind and you can't get in. And that could probably be the end of your bull market, or you end up joining at a higher level and they dump on you and you panic again. In the end, if you repeat that a few times, you're left with less capital, if you still have any capital left at all. We also got to consider regulatory considerations here. The retracement that we're just seeing could be there to align with the narrative that Bitcoin is a maturing asset class. Controlled price movements help present Bitcoin as a more stable investment-grade asset to institutional clients. That might be the other thing as well, that for regulations to actually be put in that are favorable to Bitcoin or put it in a different class, things may need to be controlled. And with euphoria, that's not going to be the case, is it? And let's not forget the ETF dynamics as well, where we have seen ETF inflows into Bitcoin slowing down and Ethereum has been gaining momentum. So if someone wants to steal the thunder from from Ethereum. What do? They manipulate the market so people panic and Bitcoin's dominance is going up. People start taking those funds that they took out of Ethereum, putting it into Bitcoin. It's all a game if you actually want to step away from this and assess it from a distance. And ETFs they are not there just to pump your bags. They are there to make money. So they also do some profit taking. Now, if we consider historical cycles, 108,000 or 108K as a potential cycle top, if you take Bitcoin cycle theory into perspective here, Bitcoin's price history follows distinct 4-year cycles influenced by its halving events and subsequent market behaviors. These cycles often see parabolic or have seen parabolic rises followed by sharp correction. Let's look at some historical high comparison. 2023 cycle, I think it topped at about 1,200 or somewhere thereabouts. 2017 cycle topped at approximately $20,000 and 2021 topped at approximately 69,000, although that's debatable because some people think because we never had a day close at 69,000, so maybe we got to refer to the 64,000, which is where we actually made the close. I'll stick to the 69,000, which makes sense to me and most people anyway. So each cycle, as you can see, saw diminishing returns and lower percentages of price growth from previous all-time highs. Assuming this trend continues, 108,000 could present an unreasonable cap for the 2024 cycle bull run, as it's coming way before the 12 to 18 months activity post the Bitcoin halving, which is something that has happened during the previous Bitcoin cycle. So my argument here will be 108,000 as the top. Just doesn't make any sense because we are like it's April to December. We are like 8 months. We still got at a minimum. It never works entire timeline, but at a minimum, you're looking at about 4 more months for us to scratch the bottom of that range of 12 to 18 months before we actually start expecting a top. Those are my own opinions anyway. But if it ends today, so be it. But guys, for us to be able to actually explore these things, we've got to keep an open mind. And for that, let's for a minute indulge ourselves and make some assumptions and make some arguments for the $108,000 as the top. Let's just assume, for argument's sake, that it is the top. We got the Fibonacci extensions. Technical analysis often gives us the Fibonacci extensions to project possible cycle tops. So a 2618 or a 3618 extension from the previous bear market lows often aligns with some of these tops we've just been talking about. Market sentiment and euphoria tends to peak near Bitcoin cycle tops. But was the euphoria that we just experienced recently enough? Was it big enough this time around, the 108K mark? I don't think so. Yes, it was coming, but I don't think it was that crazy because most people are still out. It's mostly us crypto natives who are still in here and maybe people from the last cycle who joined the party, but not all of them, just part. Because the crypto market cap, the whole market almost doubled. We topped out at 3.77 trillion because doubling will have taken us to maybe about 4.5 or somewhere thereabouts. So I don't think we've had a mass arrival of retail, new money that is. I don't think so. Some, but not a lot. So euphoria tends to peak near cycle tops, but was the euphoria this time around 108K mark big enough? What about extreme leverage and retail FOMO? It could signal a blow-off top scenario. One may argue that we probably saw two of those in sort of peak euphoria and extreme leverage because I think in recent week or 2 weeks, we've seen at least 2 billion liquidated. So yeah, leverage was starting to become unreasonable. And to an extent, you could say, yeah, euphoria was starting to, within the crypto native communities, it was starting to peak, especially on AI and AI agents, and then on XRP and the Dino coins, so to speak, and meme coins as well. So euphoria was starting to go crazy. But FOMO from retail, I think we are yet to have proper FOMO at this point in time. Now, that's on historical factors. Let's consider some time-based cycles here. If the 2024 bull run mirrors previous cycle, reaching its peak approximately 12 to 18 months after the halving, a 2024 December top does not align well with these historical patterns we are talking about. Let's give you some counter arguments here for why the 108K is not the cycle top, but this retracement could be a mid-cycle correction similar to Bitcoin's pullbacks from 65K to 29K in 2021, then rallying back to 69,000. So 65 was early in the year in 2021 around March time, and then 69 was in about November time, November or December, somewhere thereabouts. But the answer could likely be that of a combined narrative, It could be that you may have euphoria and profit taking at 100K, okay? Anchoring comes into play, whether the anchoring was at 100K or at 110, never know, because it can go slightly above or below with anchoring, you see. So psychological resistance caused by traders taking profits en masse, triggering a correction, that might be the case that the anchoring at 100K or 108K might be what triggered this, where people just said, okay, there is less momentum now, let's take some profits, and then everything just cascades all the way down. What about institutional strategy, where institutions clients capitalized on the overbought market to sell near highs, adding liquidity and preparing for lower entries. That could be the case as well. And cycle top consideration, where 108 could potentially mark the end of the current bull market, aligning with diminishing returns and Fibonacci extension patterns. That could also be a fact to consider. And other additional consideration to make, guys. So you got macro trends where interest rate decisions, the US saying they are going to be cutting less. That could be it, but I think there is a remote chance that is the actual case. People may have used that as a reason, but the real reason are still hidden away, so that you, the retail, the small player, you don't know exactly how the game is played. They just use any other reason out there apart from the real reason why this is happening. So interest rate decisions, regulatory clarity, and global economic conditions could also influence Bitcoin's retracement. We know on a global scale, the fundamentals are increasing day by day. Most countries are now being open about their interest in Bitcoin, so that can't be it. It's got to be something these big players are trying to hide. And then you got the retail versus institutional dynamics. That's one to pay attention to, and it's got more weight as well. Retail FOMO may have driven the price towards the 100K because institutions are coming. You know that narrative. They're coming, they are here. ETFs, countries, US strategic reserve for Bitcoin and so forth. That could have driven retail to take the price all the way up to 100K, while institutional sell-off pressure could have triggered the correction. So institutions sold the liquidity they just sold, and they will have to wait to get into at a lower price if they can get that as well. It doesn't mean because they're institutions they're smart. It just means that they play with higher volumes, huge volumes, and they also have certain information that we don't have at their fingertips. So they are always bound to win in most cases, but it doesn't mean they win all the time. So guys, what do you think about my alternative takes on what may have contributed to the latest Bitcoin retracement, the first of this current bull market that I think caused some concern? Because most people out there on Twitter and on YouTube, people are scared. Don't be scared. This is what happens in a bull market. If you are really, really scared that you can't move and you're frozen, you can't do anything, you can't think, you can't sleep, maybe you are extremely exposed, you should maybe consider trimming your positions. But if you are exposed in a safe way, you may still lose your money, but you may be able to handle some of these. And this could actually be one of many to come. So how many times are you going to be chopping and changing out of positions, in, out, in, out? At some point, if you do that, the market might just skyrocket without you on board. So retracements to the lower 90,000s are likely the result of psychological barriers, institutional pacing of the market, as well as historical cycle behavior. Whether this is a temporary pullback or marks the cycle top will depend on market dynamics in the coming months, particularly how Bitcoin behaves at critical support levels like the 100K if it's established as a support, or I think you're looking at about 97,000 as well as 100K. Those could be critical support levels before we move higher. What do you think, guys? Let me know in the comment section what your thoughts are regarding the latest retracement that has caused some panic and some altcoins losing double digits. But when altcoin season, this could actually be the trigger for altcoin season, and then altcoins could actually fly. But we may need a resetting of the sentiment. Let us know in the comment section, guys. Until the next one, this is FD for Sage5.tv signing out. Bye.